Hello, I'm Jonathan Moyes, Head of Investment Research at Wealth Club, and today I'm with Tom Phillips of YFM Equity Partners to talk about the British Smaller Companies VCTs. Hello Tom, welcome to the studio.
Thanks for having me, Jonathan. Great to be here.
So we're here today to talk about the British Smaller Companies VCTs. What are they?
So the British Smaller Companies VCTs are two of the longest standing VCTs in the industry. British Smaller Companies and British Smaller Companies 2, founded in 1996 and 2001 respectively. And they exist really from an investor's perspective to allow them to generate a return on their investments and invest into UK smaller companies, and therefore sort of helping to support the wider UK economy.
And Tom, who are YFM Equity Partners and what's your role there?
So YFM are an established VCT manager, been around since 1982, so lots of experience when it comes to investing in smaller companies and helping them grow. We've got about 750 million of assets under management, and about 470 million of that is in the VCT space. What that gives us is scale to invest in the business and can keep investing in the business. So we have over 60 people across the company and 40 in the investment team, which just gives us one of the largest investment teams that we have within the industry.
Very good. And so looking back at the VCT, what sort of companies do you like to back? And are there any particular sectors that you favour over others?
So the VCT, our strategy is invest in earlier stage companies. Now, to be clear, that is scale-ups rather than startups. And what we're looking for really are companies that are generating typically between about 1 million and 3 million of annual recurring revenue. We're sector agnostic, but there is a theme that runs through the portfolio, which is technology. And that's obviously going to be influenced by the VCT rules and the rate of scale and growth that you're looking to try and achieve from those investments. The businesses themselves, we are looking for them to have got to a point where they've got a product or service that's got traction. So they're going to have more than one customer. They're in that early stage, but what they're really looking for is a capital injection to help them grow. And that's where we come in, providing that injection of capital and hopefully a lot of experience. So whilst every manager I'm sure you speak to is going to tell you that management is a critical piece of the puzzle, it absolutely is for us. But what we're looking for is a management team who's looking to bring a partner on board as well. And the scale of the business that I talked about YFM having, those 40 people in the investment team, means we can help them in all sorts of different ways. And so wanting to work with management teams who are looking to have that partner on board is key for us.
Turning back to the portfolio, do you have any recent investment examples that you can share with us?
So a really good example of a recent investment is Storm Harvester. So Storm Harvester is based out of Belfast. And as a business, they use their AI-powered software and technology to help water utility companies when it comes to predicting flooding and potential pollution problems. It's a great example of the reach that YFM has. So we have 5 regional offices across the UK, in London, Leeds, Manchester, Birmingham and Reading. And actually, because of that spread, from our Leeds office, we're able to go to areas like the Northern Ireland, where we're able to find interesting businesses that perhaps other fund managers who are based in the southeast or elsewhere in the UK aren't. So Storm Harvester has come on board into the portfolio. It's grown really strongly, and their technology is now being used in over 20 different countries, including most recently into Australia and New Zealand. So lots of applicability, and I suppose that's a key part of what we look for as well. So you're trying to back a business that has a particular product or service and be able to see that progression of where it can get into. And obviously different markets is a key part of that, and different geographies.
Very good. And so turning to some of the more mature investments in the portfolio, do you have any good investments there? I'm guessing Matillion might be one that you might be keen to mention. So
Matillion's in a really interesting place at the moment, and I think we're quite excited about where that could get to. So they've spent a lot of time and effort over the past couple of years developing the next generation of their product. And I suppose just as a reminder for some viewers who haven't heard about Matillion before or haven't perhaps looked at it in as much detail as I know you have, Matillion uses its software to help companies manage their data. So the likes of Western Union and DocuSign, you'll have lots of different data in lots of different places as you get to these larger corporates and enterprise customers. And it's really that software that helps sort of put all that plumbing together and allow those data, there's different bits of data to be connected and therefore used really importantly by those businesses. So the next generation of Matillion's product is sort of building on that. There's an AI agent overlay, which again can make a really quite significant difference for the customers that they're using. It's early days. The product went live this summer. Initial traction has been positive. So really from our perspective as sort of the investor in that, or one of the investors in that, it's all about execution risk now. So how can they take that forward over the next year, 2 years, and to where they want to get it to? I think they're doing everything that they should be doing, and we're certainly very impressed with the way that the team have taken to this. And I think, look, from the UK's point of view, it's another really good example of UK businesses coming through and bringing a product to market that has a global application.
Any other examples?
We've got a cohort coming through of different companies across a range of different sectors within our areas that we've sort of got quite high hopes for. We sort of categorise the portfolio across those businesses that are new to it, those businesses perhaps underperforming a little bit, but then the ones that are sort of starting to show those really positive signs as good or potential stars. And actually there's an increasing number in that top bracket, I'm pleased to say. Two examples of the businesses that we've got towards the top end of those league tables would be Surmise and Zapion. So Surmise is a contracts lifecycle management software business. What that means in English is that they help in-house legal counsels manage the various legal contracts that their companies have to manage. So just to give a little bit more colour onto that, if you're an in-house legal counsel working in a big enterprise business, time is your most precious resource. And you can be pulled in all sorts of different directions to manage all sorts of different contracts, whether it's sort of lower value but higher volume NDAs, non-disclosure agreements, that your sales or procurement teams want to be signing, through to much sort of meatier commercial agreements. And so the generative AI engine that Surmise have developed allows those in-house legal counsels to ensure consistency across all of those contracts. It allows effectively sort of self-service to happen for those lower value, high volume NDAs that I talked about, and through to really sort of quite quick responses and detailed analysis when it comes to the more detailed contracts. So that was performing well. I think it's their 5th year in a row now. They've achieved 100% growth. Our investment came into that to help them sort of kick on their growth a few years ago. A big part of that was helping to add additional resource into the management team, but also to help them tap into the United States, where there's a huge sort of tailwind in that market for this kind of software. And so we've helped them bring on board new non-execs, new finance officer, new chief revenue officer, to really sort of help grow that team around the chief exec, who himself was an in-house lawyer by training, and he's doing a really good job. So that management team is sort of increasingly becoming more established, more strengthened, and performing really strongly. And from a US point of view, we helped them open an office over in North America a couple of years ago. And now revenues from the States make up about 60% of the overall. So the investment journey that we're on is going really well, and we're really, really excited about the potential for that one. Zapion as a sort of another example of that cohort that's coming through. So what Zapion provide is, again, a bit of software technology, where their piece of kit allows businesses, organizations to carry out KYC, know your customer, or anti-money laundering checks. So sort of the traditional approach to doing these sort of really deep dives, you could spend a couple of weeks really sort of getting through a huge amount of online information about an individual. The Zapion technology allows you to do that in a matter of minutes. So it's a really sort of interesting use of technology and leveraging the power of that. And so that has use cases in a range of different places. So as an example, the charitable sector, if you're a charity or a philanthropic organisation and you have a donor who wants to make a large donation to you, whilst in theory that could be great, in practice, if you haven't done your background checks on them and there's a problem in due course, you're leaving yourself wide open. So the Zapion technology really allows them to sort of do those checks. You can see the obvious applicability when it comes to financial services, similarly with the legal profession, fit to anywhere where you're onboarding clients. And one of the use cases that they're now starting to explore in a little bit more detail as well is around customer supply chain. So if you're looking at your supply chain as a business and really sort of trying to go into all of that and understand where all the different parts in that supply chain are sort of made up and where the various sort of parties involved in those come from. It's a really interesting way that using that technology to help you do that. So again, a good example of a business where there's a really sort of strong core product, but actually multiple uses across multiple different sectors and multiple different geographies.
I guess the ultimate goal is exits. Any exits in the portfolio that you can talk about?
Yeah, so we've had a reasonably busy time. It's sort of pretty consistent. So we've had 5 exits over the last 18 months or so. Those have generated about 2.3 times money on a combined basis. I think when we talk about the exits that we have in the portfolio, it's a really sort of really good example of the benefit that having a dedicated portfolio function that we do have at YFM brings to managing the VCTs. So as I said earlier, we have 40 or so people in the investment team. We have dedicated portfolio resource within that. And what that means is, rather than an individual being an investment director trying to go out and originate new deals, trying to transact new investments, and then trying to manage portfolio as well, and the difficulties that competing priorities can sort of put on that, having dedicated portfolio managers who are exclusively looking after those assets is really important. And typically those individuals are looking after between sort of 6 and 8 companies each. And that reflects the proactive approach that we have. So across the portfolio, we have about 40 companies, just over. And so that means we're well resourced to manage that number of manage that number of assets from that number of people. And so when I look at the exits that we've delivered over the last 18 months or so, ACC has been a good example. So that's delivered a 4.8x return, 4.8 times return. That could rise above that if deferred consideration comes through. And Travel Tech, which has delivered about a 2.2 times return, again, a little bit of deferred consideration to come. Both of those businesses are in the travel industry. So ACC is an aircraft leasing brokerage business. Travel Tech, as the name might suggest, produces a platform that is used by booking agents, in particular niche in the cruise ship industry. So what that means is that those businesses, those sectors have not been out with their challenges, and particularly during COVID, but having that dedicated portfolio resource to work closely with the management teams to be able to get their arms around them and support them through the ups and downs has been a big factor in the exits that we've been able to deliver on those two.
So turning to risks, how risky would you say this VCT is, or these VCTs are?
So I think all VCTs by their nature are in that high risk bucket. The reason that the VCT rules exist, the tax breaks exist, is because you're going into earlier stage companies. There's a higher risk of failure. There's a higher chance of failure versus some of the listed options. You're dealing with the obvious challenges that comes. And I'm sure if they look at the risk warnings on your website, those are plain to see. I suppose from an individual investor's perspective, it's about how do they get comfortable with those risks. And when they're looking at our VCT or looking at other VCTs, they should be talking to them and thinking through, what are the things that are in place to give me comfort on that? So what experience has the manager got? How long have they been in industry? What's the size of their team? What's the track record they've had on delivering exits? How closely do they work with the company? So have they got examples of when things have gone well, but have they got examples of things that haven't gone so well? And how have they dealt with those situations? So I think overall we feel our VCT stands up well within the market, because actually of those sort of different factors that I mentioned, we've invested a huge amount of time and money and effort in building the business now over many, many years to make sure that investors who've trusted us with the money, we're doing everything we can to look after it.
Very good. And so, Tom, just briefly summing up everything we've just discussed, for those who are looking to back a VCT this year, what are the, say, key 3 reasons why they should be backing this VCT?
So I think if I was going to pick 3, I would talk a bit about performance. So the performance of the British smaller companies VCTs has consistently been strong. If you look at the research on your website, if you look at the general research in the market, we're always towards the top end of the league tables over the longer term, which I think past performance is no predictor of future success. But clearly having a VCT that has been around and has been able to deliver that consistent performance hopefully gives comfort to investors. And that I should also say that from a cost point of view, the charges that the BSC VCTs have in place are at the lower end of the market as well. So that's the right way around, I think, if you can get yourself in that place. I think the second point I would point to is the strength of the manager. So YFM, as I say, we've been around for over 40 years, got one of the largest teams in the market, it's dedicated focus on portfolio. We've also got that regional network and strong ties into the sort of the generation of new opportunities, which is also augmented by the deal origination team that we have. And then I think the third reason is that sort of experience of working with these British smaller companies. The clue's in the title. This is what we do. This is what we've done for a very long time. And there's a reason that I think investors want to put their funds with us, is because they understand the sort of the experience that we bring, and I think they understand the opportunities that we're helping to sort of invest in, have a bigger impact across the UK economy, which is is ultimately what we're all trying to achieve.
Well, Tom Phillips of YFM Equity Partners, thank you very much.
Thank you.
If you're watching on YouTube, please press like or subscribe to the channel for more.